GDP data out for the second quarter. It's come in at 4.8%, throwing up the question on whether or not the economy has bottomed out. No better than Mr. Montek Singh Ahluwalia, Deputy Chairman of the Planning Commission, joining us from New Delhi to answer and ponder about that question. Mr. Ahluwalia, hi, good morning. The Q2 GDP has come in at 4.8%. Can we now say that the economy has bottomed out?
Well, this is the GDP number for July-September. And I think 4.8 has to be compared with the 4.4 of the previous quarter. So while I wouldn't put too much weight on the fact that it's gone up, it certainly suggests that in the second quarter of the financial year, the economy had at least bottomed out. It may actually have begun a little bit of a rebound. I think what we really need to watch is what is happening to industrial production. Because clearly on the agriculture front, this is going to be a good year. But in my view, the real sign that the economy has recovered is when the industrial production begins to do better. Now, it has done better in the second quarter compared to what it was doing earlier. But I think you need a little bit more robust performance there. You know, we have been saying that it is in the second half of the year that you'll actually see a serious rebound. And that would mean essentially that the second half growth performance should go a little above 5%. If we get that, then I think one can in retrospect say that somewhere in the middle of 2013, the economy began to move up. But definitely, bottoming out, I would say definitely yes.
But Mr. Ahluwalia, but some would argue that the agricultural economy is doing well, but in the second half of this year, government may go easy on their spending because the finance minister is committed to stick to his fiscal deficit number.
Well, but I don't think that government spending is going to be lower than it was last year. So whatever the outcome on government spending, if you're looking at growth, you need to compare the level of government spending with the level of government spending in the previous year. And I don't think there's any suggestion that the level of spending will be less than that. I think the concern really is that the big increase that was expected, if the budget had been fully realized, may not happen. I don't know what the outcome will be. But that should not at all be a reason for arguing that growth will be held up, because for that, the relevant question is, will government spending be higher than in the previous year? I think it certainly will.
So how should one read into the data point of planned expenditure? The number is out in the open that what will happen to the planned expenditure for 2014? It will be slashed.
Well, let me say what has happened on planned expenditures is that last year, the spending rate was a bit on the low side, which is why at the end of the year, money was held back. So we in the Planning Commission have been warning the ministries that they should actually improve the pace of expenditure on the plan side to avoid money being withheld later in the year. And on that, you know, if I remember the results correctly, at the end of September in the previous year, the expenditure was plan expenditure was around 39% of the budget estimate at the end of September. This year it's 43% of the budget estimate. And of course, you know, you might say that at the end of September it should be 50, but actually there's the monsoon and rainy season and whatever. So I would say that at the moment the pace of expenditure has not been bad. But there are some factors that might slow it down anyway. One of them obviously is that in 4 states you've had elections. And elections do interrupt the pace of expenditures, all happening in the key parts of the working season. Next year you're going to have a general election, and that will also lead to some slowing down of expenditure in February and March. I mean, that's an unavoidable consequence if the election is going to be taking place at that time. So my guess is that there will be underspending, but I don't think that underspending in 4 or 5 months alters the ability of the economy to get back onto a reasonable growth path. It won't get back to 6.5% or anything like that. But I think our objective should be that in the second half of the year, could we end up with a growth rate, say, a little above 5%? I think that is feasible even with the constraints on government expenditure. I mean, the critical thing there is to get projects moving, to get project implementation sorted out. And frankly, on that front, we have a lot of good news. I mean, there is a website on the Cabinet Secretariat, there's a project monitoring group looking at large projects, both public and private sector projects. And I think they initially started with about, 330 projects, which for a variety of reasons were stuck. And I think at least half of them have had all their implementation constraints now removed. Of course, implementation constraints is one reason why projects get stuck. Financial constraints are a separate reason, so that's something that investors have to resolve. But all said and done, all problems are never solved. Our main concern is if a lot of problems get solved, then there will be movement on the ground, and that's when industrial production will pick up. The reason why industrial production is actually low is because capital goods production is quite low. And capital goods production also takes time to be reflected in the data. I mean, for example, if orders suddenly go up and people start producing capital goods, since capital goods take time to produce, for the entire period that they are actually in the factory, there's no recording of production. A production is recorded when it leaves the factory gate. So that could itself be a 3 to 4 month delay between the actual production, orders, and the start of production, and recording as production in the Industrial Production Index. These lags are really quite important. And I think that the system is now getting back to something a little bit more normal, and therefore I'm hopeful that in the next 2 quarters we'll get better results.
Mr. Ahluwalia, what about domestic consumption? Because clearly the equity markets have been giving a lot of weightage to rural consumption themes. How are you seeing the trend between rural and urban areas pick up?
Well, our view has consistently been that one of the great positive stories of the current growth process is that the rural performance has been actually very good. I mean, first of all, agriculture over the last few years has done better than it did in previous years. Some of the steps that have been taken, like the Mahatma Gandhi Rural Employment Guarantee, have actually led to an increased ability of labor to get higher wages. I mean, this does lead to complaints from farmers, but on the whole, there's been faster growth of income in rural areas and also a somewhat better distribution of this income. This is actually reflected in big demands, in a boost, if you like, in rural consumption. And virtually everybody who is looking at rural retail plans seems to report that they're doing quite well. And a lot of surveys also suggest that rural consumption is beginning to diversify away from the basic food consumption towards the consumption of other commodities. So the rural prosperity sign is a good sign, it's good for inclusion. I think it's also good for industrial growth. And that will play out over the next 6 months even more as the effect of a good monsoon is actually felt in terms of cash flows coming in into farmer households.
All right. Mr. Ahluwalia, last Friday I attended the India Economic Forum where you also were a speaker. And I think the question or the message I've come back with after my interaction with several investors who attended that meeting is that why is decision making so slow? What is government doing to address the decision making? They are appreciating the measures which have been taken. They are appreciating the fact that the Indian economy has recovered. But decision making, well, no one is satisfied with that.
Well, look, we are also not satisfied with that. I think in general, decision making in governments tends to be slow. When everything else is working well and the economy is growing at 8% and so on, nobody minds the slowness of decision making. People go ahead in anticipation of decisions, etc., etc. When the economy slows down and you need everything to be working perfectly, it's very clear that government decision making is slow. Nobody wants to anticipate a decision. Nobody wants to take a step assuming that, the decisions will come. And I think that's good. That's putting pressure on the government that, you really need to deliver according to a timeline. I think it's also true that what has happened in the past couple of years is that the excessive focus, the belief that virtually every government decision can be questioned on grounds that, it was motivated by the desire to help one person or another person, has led the bureaucracy to be extremely cautious. And this caution naturally increases as we head up to an election because decisions all get politicized. Now, I think some of the slowing down of decision making in the run-up to a general election is quite normal. But I do believe that looking ahead, we need to have much greater clarity on how decisions should be speeded up, and under any circumstances, delay as an excuse for not deciding should simply not be permitted in government processes. And I think most of the times what happens is not that a negative view is being taken, but simply the decision is being postponed. Frankly, I think we are better off if a negative view is being taken. If that view is wrong, it should be overruled at a higher level. We should get away from a system where people feel safe by not taking decisions. This cannot be done very quickly. I think it's something that the new government that comes in after the elections would be well advised to think of systemic process changes in the way government functions that would essentially make timelines very tight to adhere to, and also, quite frankly, that would allow changes in decisions during a government process. I mean, just because at a certain level a decision is taken, there should be no presumption whatsoever that that decision cannot be reversed at a higher level if it is felt that the previous level decision was wrong. And I think we should set up processes that would enable people to do that.
Right. So the new government is still 6 months away. But I want to understand from you is that in the run-up to the general election, which is 6 months away, what are the decisions this government will take?
Well, I don't know what decisions the government will take, because government decisions are, after all, taken by the cabinet. You have to remember, by the way, that the ability to take new decisions is seriously reduced the moment an election is announced. So, although the election has to take place, the new parliament has to be convened sometime in May. The election process depends on the election commission, but the period of time that the government has to still take a few decisions, maybe a couple of months. But in my view, 95% of what needs to be done doesn't relate to new policies. It relates to decisions within an existing framework. I mean, for example, we have 330 projects which have been identified by the core group in the Cabinet Secretariat. I said approximately 150 of those clearances have been expedited, so government clearance is not a problem. And frankly, if you can add another 50 to that, that would be a huge benefit. It would give the promoters a clear signal that you don't have any more government decision-making which is holding you back. Of course, if you need to get finance, then you have to get finance, and that's not easy. But, if promoters concentrate all their energies on that, and bankers see that these decision-making processes have been speeded up, I'm certain that many, many more projects would get off the ground. Maybe not all, but many, many more. And that's really what we need to concentrate on. Of course, there are some bills pending in Parliament. It's a very, very short session, so I have no idea how much we'll be able to do. But ideally, I would like to see virtually all the bills that are pending cleared before the end of this Parliament.
Mr. Ahluwalia, the one thing that the equity markets have been liking of late has been that the currency has somewhat, strengthened. Is 61, 63 the now new normal for the rupee? And would it be fair to assume that the volatility / weakness in the currency at least has been contained for the near term?
Well, as you know, we're not following a policy where we declare what is normal. But certainly on the question of volatility, the nervousness that was seen earlier in the current calendar year, sort of May onwards, when the rupee suddenly depreciated, was due to a number of factors. I mean, first, it was due to the belief that the current account deficit of the previous year was far too high, and that India could not possibly expect to finance that, and that would lead to pressure on the rupee. Secondly, there was a perception that the rupee had appreciated too much earlier, given the higher rates of inflation, and that on any kind of purchasing power corrected basis, the rupee needed to depreciate. Now, how much it needed to depreciate, people were not sure about. And depending on what assumption you made, you got anything between 60 and even 65, although I think that's an extreme. Now, the situation has changed dramatically since then. I mean, first of all, any fear that the current account deficit is out of control has, I think, abated. At least I think it should have abated. The finance minister, sometime I think in June, sort of recognized that this was an issue and said that we're counting on the current account deficit falling from about 4.8% in the previous year to 3.7%. Actual performance since then shows that it's been much better. Exports have reacted positively to the rupee depreciation. I expect that the current account deficit will definitely be below 3%. It could be between 2.5 to 2.7. You can't be very precise on those things. So from the current account deficit point of view, there's a huge improvement compared to the situation which we last saw volatility. The second point is that currently the rupee is positioned in a much more reasonable range. I mean, it could even be argued that anywhere in the low 60s is something where, from a competitiveness point of view, there's really no case for a further depreciation. So those two factors, combined with the fact that global developments in the Middle East suggest that we're not going to have an oil shock, we might have some positive movement, also combined with the fact that the finance minister has repeatedly said that he's going to stick by the red line of the 4.8% fiscal deficit. My